All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
I got something a little bit interesting today. I like to sell covered calls to generate a little bit of income against my long-term positions, and I was kind of curious as to what that would look like if you had a large kind of dividend portfolio and like how much additional income you could generate from doing something like that. So I picked a pretty prominent YouTuber here, GenEx Dividend Investor. Really nice guy who actually does all these videos about his portfolio, growing it over time based on dividend kind of cash flow principles, right? So what I did is I went to one of his videos and I pulled down his portfolio, figured out how many shares of each company he owns. These are the companies in which he's invested. He has about, I think it's like $2.2 million in equity. And I figured out, like I said, how many shares, how many options contracts. As those of you who don't know, an options contract represents 100 shares of an underlying company. And then what I did is I looked up, as of this past Friday, which was April 31st, 2021, I looked up what I could get for a Delta 30 and a Delta 10 premium. Delta 10 and Delta 30, I'll explain that for a second. So it's an underlying, kind of odds ratio of the option being in the money at expiration. It's not exactly what it means, but it can be utilized that way. The Delta 30 implies that it's about 30% chance of that option being in the money at expiration. Delta 10 implies it's about a 10% chance of that option being in the money at expiration. Now, I did about 28 days out. Now, if you look at the kind of theta decay curve of a option, it really accelerates towards the end. So if you're selling premium in order to, selling options to be able to generate some premium, and you want to capture that theta decay, you want to be doing it within the last 30 to 45 days, ideally, of the option's life. So most people who are doing covered call strategy do it kind of on a shorter time basis.
It really starts to turn down at like day 45.
Yeah, it's I'll show you. Yeah, exactly. It's much more prominent as you accelerate there. You kind of get this little inflection point here where it really starts to change its angle. And that's what you're trying to capture. So, if I'm looking at this, Delta 30 basically and Delta 10, I multiply that out times the number of contracts that he would be able to sell based upon his current portfolio. And these are the numbers I arrived at individually, right? So, his Apple, which is his large position, he'd be able to get $2,600 a month in premium selling the Delta 30 calls, or $680 selling his Delta 10s. Brought it all the way down to the bottom here. And this is what potential monthly income selling covered calls against a $2.2 million portfolio generates here. Is about $17,000 a month if you went with Delta 30, or $5,300 a month if you went with the Delta 10. If you analyze that out just by multiplying by 12, which is not exactly perfect because that's only 28 days, so that would not be correct. But you're talking about $200,000 a year at Delta 30, or $63,000 a year at Delta 10. Now, he's currently generating about $81,000 a year in dividend income from this portfolio. So, it's an interesting kind of add-on that you could do to generate some additional income when you have these kind of long-term positions. So it's I feel like an underutilized strategy amongst dividend investors specifically. I actually want to, after we finish making this video, I'm going to send it to him and see if I get any comment back, because I'm kind of curious
if he'll do it.
Yeah, what his thoughts were regarding this. There are actually ETFs out there that you can invest in, or even not the ETF, but like a closed-end fund that utilizes this strategy too. It's complicated. It definitely involves more work. Now you're looking at your time to expiry, what happens when the position is moving closer to your strike price, and when do you roll it, and that sort of stuff. It's not a perfect, easy set it, forget it kind of thing. It's definitely more involved than
way more active than
simple dividend investing. But
dividend, if you have the capital, you just get it. You don't have to do anything. It just goes into your account.
But people talk about. Are you familiar with the FIRE movement, Dylan?
FIRE movement?
Yes.
No.
No, not this doesn't sound familiar. So it's an acronym for Financial Independence Retire Early.
Oh, yes, I do. I am familiar with that. Didn't know it was the FIRE movement.
Yeah, that's what they call it. The whole premise is trying to create a passive or semi-passive stream of income, which allows you to no longer work like a traditional 9 to 5 job, right? And I have not heard really many of them talk about a strategy like this. A lot of them dividend investing is very popular, but I haven't seen anyone talk about dividend investing plus like a covered call strategy. Despite the fact that when we're looking at numbers like this, it's pretty convincing that it would expedite your ability to live on your investment income alone, right?
Yeah, I mean the covered call income alone could pretty much even the Delta 10 that was like what 60 grand a year, 55.
Yeah, 60 grand a year. I mean, he's got a $2.2 million portfolio though, so I mean, it took him a while to get up to that point, but so you're talking that between $60,000 a year in Delta 10 plus the $81,000 a year in actual dividend income. Not talking about $144,000 a year or something like that.
Plus the growth of the stocks. I noticed he had 99 shares of HD.
Yeah,
Home Depot. Man, have you looked at Home Depot's chart?
Yeah,
they like added like 50% value in like the last 3 months. They're crazy. Oh, yeah. It's insane.
Yeah, this is not designed to be a video entirely about dividend investing, but one of the things like that kind of I feel that dividend investors often overlook is that dividends are not even the best way in which a company can reward shareholders. It's actually like the worst of three.
Being share buybacks and what growth?
Reinvestment within the company, right?
Yeah.
We look at companies like that have reinvestment. I want to say Apple's is like 25% plus. So they're reinvesting at a greater degree than we're capable of on the outside. There's a lot of things that are really interesting. Low-key, I read an article this morning about Apple has done over 100 acquisitions in the last 5 years. They do small acquisitions that they don't make publicity about, but they are constantly reinvesting on our behalf. Never mind the $90 billion share buyback that they announced last week. So dividends
just $90 billion.
Are just 90 billion, which is almost the market cap of AMD, in case you're curious.
100 billion.
Yeah, they dividends are not exactly the end all be all of ways to generate income from stable, large, profitable companies. In my opinion, share buybacks are great, and then also this covered call strategy is another thing that can be employed to generate a little bit of extra income there.
Yeah, for sure, absolutely.
Yeah. Anything else you want to add?
No, I'm horrible at covered calls. I do the ones with a 98% success rate and am right about 3 out of every 10 times. I don't know how that's even possible. Yeah, I'm so bad at it.
I know. I need to be more diligent about tracking mine. My success rate's probably better than 80%, I would say, somewhere in that ballpark, 70, 80% in terms of capturing premium versus having my shares called away.
I'm so bad. I remember I did CCL at Carnival with 3 days to expire at $15, and the strike price was like 19. And then they just announced this, and then I lost it. I was like, "Are you kidding me right now?"
Yeah. You can't chase that huge juicy implied volatility like that. That's when you get yourself in trouble. You have to.
It was 3 days. There was no juicy. I made $6.
But as you move shorter time frame too, get up to like that 3 days. The whole distribution of what's expected, for the potential stock prices becomes narrower and narrower, so you have less of a margin for error when it comes to like shorter expiry dates like that.
You'd think.
Yeah, you do.
You'd definitely think.
Yeah. All right. Thanks for tuning in, guys. We'll catch you on the next one.